from a short seller's perspective, that's like the best part of the hot cycle to really push the pedal.
Yeah, so I'll probably continue to press on the gas tomorrow.
Why would I not play that momentum?
Hey, what's up, everyone? Welcome back to another episode of Trading Takes with me, Sam, presented to you by Investors Underground. Now, we are in the midst of a hot small cap summer. We're recording today's episode on the 23rd of July, and we just had SERV, MIRA doing multiples of hundreds of percent. It's just completely wild at the moment, the range. And I always think with small caps, it's one of the things that always blows my mind is that there are guys out there making exorbitant amount of money trading these companies that no one's ever heard of, and probably products that people, quite frankly, will never use. So tonight's episode, we are going to be focused on how to make the most. Now, joining me tonight, we have two of the usual suspects, Chris and Stan from Team IU. How are you doing?
Doing well, Sam.
Good,
Yep.
good.
Doing
Now,
pretty
obviously, we are, like I said, we are chatting everything small caps tonight. We're in one of the hottest small cap markets in, quite a while. And for that, we need three veteran small cap traders. And that is exactly what we've got. You may not know all three of them as a whole, but you should. So introducing, first up, we got Mo, Adnan, and last but never least, Thiz. How you guys doing?
Good.
What's up, guys?
So to kick things off, elevator pitch, gentle introduction, whatever you want to call it. Let's go alphabetical order. So Adnan, tell the audience about yourself.
All right. Yeah. So started trading maybe 10 years ago. Started pretty young. I was 14, 15 years old, and was a small cap trader from the get-go. So I'm a primarily short seller. I like to look for all-day holds, all-day fades, and but I will also go back and forth and scalp a little bit here or there as well, but mostly discretionary.
No, very nice. And next up, Mo.
What up, guys? I think me and Adnan probably started at the same time. I started at 2014. Small cap, discretionary, opportunistic, short seller, but developing the long game. And yeah, that's about it.
Yeah, no, cool. And Thiz, over to you.
What's up, everybody? My name is Chris. Everybody calls me Thiz. I've been trading for about 5 years, a little bit before COVID, but still COVID. Short, I long, but this year has been mostly, I'd probably say leaning towards the long side as of the last few months.
Oh, that's cool. And so to kick things off, like I said, we are in like we were joking off camera, like, oh, there was nothing to trade today, and then like equally, like everyone's got bloodshot eyes. They've forgotten to eat them today. Stands on his like 25th coffee or whatever is in that cup, maybe something stronger. So to kick things off, now you've touched on small caps. So why small caps? Let's go back in alphabetical order. Adnan, you kick it off. Why small caps?
Why small caps? Well, first of all, like from the get-go, I was drawn into the small cap space. I think originally it was because it seemed like the most volatile thing, and being a young guy, I didn't know about options or anything like that, so just immediately kind of jumped into small caps. But I mean, I guess with like hindsight bias, small caps do seem to be like the low-hanging fruit of this whole trading game, and I'll take the low-hanging fruit all day, right? It's one of the toughest ways to make a living. So and I think there's a clear directional edge, so you don't necessarily have to spend so much time at the start, at least, figuring out where the edge is initially when it comes to direction. So I think that's why I gear towards small cap.
Yeah, I think that's, to be honest, I think that's the same for me. It just feels like, it just feels like you're up against, perhaps, you're not up against as many of those big institutions, which I think is a big thing. Mo, what would you say? Why small caps?
Oh, I'd say the same thing, just a little differently to sort of rephrase Adnan. the volatility is high, and a lot of the action can be fairly well predicted or predictable. So you have a combination of volatility and potential predictability, and that's low hanging fruit. I would also touch on what you said, which I also feel small caps is by and large behavioral finance, right? You got the three types of edge, right? The informational, behavioral, whatever. But so small caps is predominantly driven by behavioral and the least sophisticated of all the behavioral. So it's a nice pond.
Yeah, absolutely. And there's last but never least today. I will come to you first at some point.
No, you're
today, I
good, man.
promise.
Man, small caps is honestly just the first thing I had ran into, and I got lucky that it just kind of clicked for me. I have tried many other things. I've tried options. I tried large caps. I tried futures. And to me, I think the tape is a lot different on a small cap. I think it's easier to read the emotions and capitalize on it for me personally. I think there are obviously like the one-off opportunities or those big opportunities like multi-day mid-cap moves or something like that. But small caps generally for me is I don't want to call it easy by any means, but it's been easier for me personally.
Yeah, and I think fundamentally as well, like we all like work on a bit of, well, particularly on the short side, you're working on an assumption that this is not a good company. And
Right.
I think for me anyway, like someone who needs to have some, I don't know, it just adds and helps with my conviction, which obviously I know can be dangerous as well at times. Now, Stan, I know you trade a mixed bag, but I'd still say small cap is still your baby, I would say, right?
Yeah, yeah. No, I would definitely say, predominantly on the small cap side. But I do trade a mixed bag, and for me, it's more so momentum, right? I trade momentum, I trade volatility. So if there's volatility in small caps, I'll be there. If there's volatility in large caps, mid caps, I'll be there. And that's really what it comes down as for me. I view volatility as a forgiving environment, as long as you have some sort of structure behind what you're doing, and you have these guide rails to sort of keep you either in balance and preventing you from going off the rails, or something that a systematic way to where you can either apply a discretionary bias or exercise some sort of a edge.
Yeah, no, absolutely. And Chris, I'd say that, I don't know, I wouldn't say that you're famous for small cap trading, but I know that when the heat is on and there's a signal, I know you're in.
Yeah, definitely. So I trade different kinds of markets. I do a lot of options, large caps, small caps. I'm all over the place, but when small caps are hot, I definitely gravitate towards that. I mean, sometimes it'll be like 6 months or a year where I'm really not active with small caps, but there's times like this where like that'll be my focus for months at a time. And I'm solely long on the long side when it comes to small caps. With options, I go both ways and everything, but with small caps, I'm parabolic squeezes, breaking news, things like that. So when the market's hot, when there's money floating around and you have that giant pile of money basically just jumping from name to name, and you get that volatility, you get all kinds of setups coming from it. That's where I like to be.
All
Yeah,
right.
and you raise a great point about sort of how to react within sort of a cycle. So since you brought that up, and I know you're going to have a really good answer for this because it's right up your street. How do you characterize a hot small cap cycle?
Well, I think part of it is just knowing what kind of trader you are and what do you like to trade and what kind of setups do you like to trade. So if you have a market where the things that you like to trade are present, like so for me, like with parabolics, with squeezes, those things don't happen a whole lot unless there's a very hot market, unless there's a lot of money floating around, unless like there's crowded names. And so when I see those signals, that's kind of like game on for me. And so I think that, one of the benefits of being in a hot market is that you get increased range on things, you get increased volume on things, and you get more opportunities. There's more names running. than usual. And so if you kind of have those three things, that's basically just like a playground for someone who has setups. And so if you have those things that are present, then you kind of focus in on, what kind of setups do you like to take? For me, like if it's long, then you have to find a risk level to base off of it. I like to think about stocks and, setups and structures. And so, very supply demand. And if I can kind of figure out what that structure is, and if I have a way to play it, then that's what I like to do. But when small cap cycles come like this, and it's changed over the years between the OTC, small caps, altcoins, crypto, like speculative money goes to all different kinds of places. But when it's in small caps, equities, that's really a good place to be. And it doesn't happen all the time. So you got to take advantage of it.
Yeah, absolutely. And I know, Adnan, you had you shared your start to the year. So we know you had a great first half of the year. Under your criteria, how would you characterize a hot small cap cycle?
I wouldn't say that I have like a set criteria, but I think like for a hot small cap cycle, you definitely need to have a lot of runners, midday runners that are making 100, 200, 300% moves, right? And also you when the cycle first gets initiated, I think you want to look for things like are are support levels getting soaked when they dip under? Like, do you see that dip and rip sort of candle where it like something typically looks like a short setup, but it actually gets absorbed and it just, it just accumulates shorts going up and up and up. And, I think a prime example of that was like Friday on, I forgot the ticker now, SERV, I believe.
Yeah.
And then on Monday as well with MIRA, right? Where, a lot of shorts are getting trapped. And I think that's like what initially starts off the hot cycle. But then I think that slowly that cycle starts to fade off, right? And then you have days like today where, you start to see, failed replication style names where, something like, I'm horrible with tickers, but I believe it was AZTR, right?
Yeah.
Or, and there's another one as well with it where, that huge range is still there, but now this time short or longs are in euphoria and, the short's already exhausted from getting smacked 2-3 days in a row. So I think that's when it's the best to kind of push it as a short seller when you really start to see, 2-3 days in a row, longs are in really big euphoria and shorts have just been getting smacked. So yeah, I think that's like from a short seller's perspective, that's like the best part of the hot cycle to really push the pedal.
I hope that you're all enjoying this conversation that we're having about small caps. One of the best ways to become familiar with small cap trading is to be around experienced small cap traders. Right now, Investors Underground is running a special called the Test Drive, where you can see everything inside of Investors Underground, including watch lists, technology, and get access to all the commentary, the morning broadcast, the midweek study sessions, and more for next to nothing. Take advantage of this deal by clicking the link in the description. Now back to the conversation.
Yeah, I always think that as soon as you see it, as soon as you have like a move like SCIV on Friday, like obviously there's going to be sympathies running and it's just generally going to be hot. And the same with MIRA. Like all of a sudden we had like ADIL, like we had a huge move today. What was the other one was AZTR again.
Yeah.
Just the range was just incredible. And I think from like the short side is perhaps, I wouldn't say it's easier because obviously you got to make sure that you're not getting smacked on the front side, because if you're treating SERV like perhaps you would have on Monday last week, say, then all of a sudden you're going to be looking at a pretty big L on that. Now, Thiz, you mentioned that like this year you've been primarily long. So how are you characterizing? How do you know when to put your foot on the gas? Because you've got to obviously make the most of something like SDRV, MIRA, and then those on, those net tickers on the front side today as well.
I think it's a lot different from long to short. Like on the long side, today was the day where I would give my first shot at pressing the gas, and then based off of that experience, I would adjust going into the following day. I had a pretty good experience today. I think it could have been a little better, but So I'll probably continue to press on the gas tomorrow. But kind of like he said, we get that first name that like for me it was Mira, for my basket of setups right now.
Yeah.
And so after that, like he said, you get people that want to catch the next one, and they want to catch the next one. But on the short side, it's a little different for me. I want to see all of that happen and then get aggressive. Like I want all the bullshit to get out of the way, and then usually the easier setups come after that. And so, um, previous years, I was trying to catch both sides of the move on the same day, and sure, it might work out for a while, but whenever I would slip up, it would be a big slip up. It would just be too hard to manage both sides for me personally. Um, so now, like I'm trying to take advantage of the first part of a cycle or even a theme, right? Which I'm sure we'll talk about how
Yeah.
we differentiate the two. Um, but yeah, so on the long side, I'm pressing the gas day two, feeling it out, and then right if it feels good, going to three. But it's kind of like drifting a car, you gotta like feather that pedal a bit, because even inside of a strong cycle, you might have periods where the price action is just not really doing what you need it to do. But in my experience, the probabilities feels very good on the long side after that big runner. Given that we've had a period of maybe a slowdown, like a period of, and I'm not talking slow in terms of like we don't have gappers, but I'm talking slow in terms of like things that aren't very actionable, like things we really can't take um, action on, like just a slow period. So if that happens and then we have something spark, I feel a lot better. But if it's been pretty hot and then we see something spark, could be tail end. Like let's say we already have 2 weeks of hot market and then we see uh, a new crazy name. Like that might be the one where we need to look to get aggressive on maybe day two or something on the short side, and then all the sympathies that come from that one. Um, Probably a good idea to short their failed follow through setups.
Yeah, yeah, no, absolutely. And like coming to you next, Mo. Like I know that we've had this chat, a couple of days ago because we were talking about SERV, for example, on Friday, and like I know a lot of people did take L's on it, and you mainly short, but you're long that name. Um, Now is kudos to you. Now, I mean, just throw it over to you then. Like, did you think? I mean, are you thinking about? Let's talk about. Are you thinking about a cycle in the moment, or are you just thinking, hang on a minute, this is just a daily that I like? How are you approaching that trade on Friday?
No, I wasn't thinking about it in terms of the cycle. I do think about the cycle plenty, and I have lots of thoughts about it. But I mean, I was, very involved with, Soon and NNOX on that last round, and I've been doing this for, back when they had their, silly little NVIDIA things, and I think we've all been around so many times where shitcos say, oh, they rephrase that they have an account with Microsoft or Google or whatever into something that sounds something completely different, and it moons, right? So we know what the most nonsense of these kinds of things can look like, which is the small caps BSing that that they have something going on with them, and we know what it looks like when a misinterpretation of an actual position by one of these lumineers does the stuff like Soon and Nanox. And so when you have Serve, which Soon is problematic to say the least, SOUN. And so you give me something like Serve, where it has all the hallmarks and none of the downsides. Why would I not play that momentum?
Yeah,
it seems like a no-brainer.
Yeah, no, absolutely. And as a follow-up question, then, so obviously, like that did kick off momentum. So how are you adjusting then coming into the following day? So how have you adjusted then coming into like Monday and Tuesday this week?
I mean, it's Mira that caused me to adjust. Serve. Look, I want to make sure that everyone knows that all of us take wins and losses. On serve in particular, I caught both sides of. I was, on the correct direction on day one and on the correct direction on day two, and that's lovely. But that's we're cherry picking a little bit. That being said, it served. I didn't think that it would kick off a cycle because I didn't really see how that translates into creating a larger spill sort of watershed to other stuff. Mira was clear as day. When I saw Mira, I was like, I got to wake up at 4 a.m. The next day. You know what I mean? Because I just didn't see the spill off from serve to what? Click it. But with Mira, I knew.
Yeah. And it's an interesting point that you raised. And Chris, you'll remember the tick. What was the ticker there was a ticker a few months ago that they basically said they were partnering with Microsoft, and all they did was purchase some sort of, I think they purchased like the Microsoft Cloud, and they said it was a partnership, and then it ran 300-400% and offered after hours.
Yeah, was that like MARK or something? I don't remember. It was one of those.
I knew you'd
Yeah.
remember that. Yeah.
Exactly. That's the one I had in my mind too when I was looking at serve. You nailed it.
Yeah, where they had the helmet with the Microsoft logo. Yeah, that was Mark.
Yeah, they had an NFL helmet, didn't they? Wasn't it? Yeah.
And they weren't the only ones. They were just like you see it over and over.
Yeah.
Not every month, but you see it, and so.
Yeah. No, I mean, ultimately, and like that goes back to why we gravitate to small caps, because we know they are ultimately, diluted machines. And Chris, you've touched on loads that actually there are some management teams that are incentivized actually not by performers, but how much money they can raise.
Yeah, 100%. I mean, just kind of like for some context, like the way that small caps work is that most of these small cap companies never generate any revenue. They don't generate profits. So how do they stay alive? How do they get cash? They basically have press releases, or they attach themselves to some kind of recent news. The stock spikes, and then what the management does is that they dilute the stock, and then they use that cash to pay themselves. And that's kind of the process of small caps. And that's why if you zoom out over 5 or 10 years, they all go down, at a nice 45-degree angle into the abyss. But along the way, you have these, pops. And so that's why being like a short seller in particular tends to be very profitable in small caps, because you basically have, 8 out of 10 names that gap up will kind of fade back down. And most of them have dilution that is going to happen. So that can like bail a lot of people out. But then on the other side, the two that kind of catch people off guard, they end up going 300%, 500%, 1,000%. And so it's just kind of like that. That's kind of how small caps work. And then that's how, if you get these hot cycles, you just kind of pick which side are you on, which setups do you like. But, that's what the management teams are doing.
I'm wondering what Stan's laughing at in the corner.
I'm sorry. It's just it's true. I think if you've been around the markets for a while, I mean, you see how they're just layered, right? And the small caps is just that very bottom layer of, in terms of revenue, in terms of growth, in terms of potential of it actually being, hey, I have a bunch of my life savings. Can I put them, to work? Well, sure, but maybe not in this layer, right? And what Chris was saying is absolutely correct. Their entire existence is all about paper, and how it is circulated and moved. So it just hit me really hard, because it's been like this since day one, and I'm sure it's been like this since day one for whoever the oldest trader out there is, right?
Yeah. I mean, I've been training a similar time to Thiz, and I don't really remember too much different, to be honest. I know there are a lot of people saying actually this year's been quite quiet, and there obviously have been periods where perhaps like there may not be a 200% gap or whatever, but equally, like, it's been more than made up for the fact that you will wake up to what did Mira yesterday did? Like, was it 500 plus? I think SCRV was decent. Today, AZTR, that was something similar. ADIL, that was 300% as well. So I mean, there's absolutely so much range there. The next thing, so I mean, yeah, we talked about a cycle, and I think I mean, in terms of small caps, I think we've actually been in a really luxury position where actually there's always something to trade. So in terms of like your daily sort of routine, what does it look like? What does your prep work look like? Let's go, Thiz, let's go over to you first, because I said I would come to you first.
Oh, I was like, dude, don't come to me right now. Look, man, I wouldn't recommend that anybody do what my current cycle is as far as routine. Dude, I'm gonna be honest with you. I've changed things up a bit, dude, and like really prioritize just being comfortable in life, so I can be uncomfortable in trading. Dude, I'm sleeping in. You know what I mean? Like I'm coming to the desk with maybe 10, 15 minutes to quickly scan through what's on the scans. But I've been doing this for a while now, so it doesn't take me as long to set up what I need to, do in the morning. Like I can take a real quick look at the charts, what we got running. I don't even need to know the damn news, like I know if I'm going to be trading or not as soon as I pretty much look at the screen. I skip the first 15 minutes to open unless there's a multi-day kind of runner that's opening very aggressive. I just skip the open entirely. Or if there's something like SPWR yesterday for like a tiny mean rev scalp, something like that. But man, I'll be honest with you, I've been kind of slacking. I think it is important for people to do their reviews, which Stan pounds the table about, and I make time to do that for myself. But outside of that, dude, I come to the desk and I let the market hand me something, and it either does or it doesn't. And I try not to force anything because that's a big issue that I had in 23. So yeah, my routine is kind of half-assed right now. I'm sure everybody else is going to be a lot better than mine.
No, I absolutely love that, and I would say there's one like I obviously follow you on Twitter and you've had a few comments. I know you're 100% transparent, and I absolutely love that. And I just want to say as well, I am with you. Like I used to be glued 4 a.m. to 8 p.m. and I know Mo is I don't know if you still do it, but Mo I'd be up it'd be 9 o'clock my time, and it would be obviously 4 a.m. Eastern, and me and Mo would be just chatting away. Yeah. I'm like,
yeah,
dude, go to bed. I'm with you.
Yeah, when the opportunity's there, dude, by all means, you know what I mean.
Yeah. No,
but like you said too, it's not every day, and it's not even every week. So, but I don't know, man. I like being relaxed now, dude. I lived through the first couple of years of trading were very stressful, dude, and I took it real serious. No days off, up 6 a.m. every morning, scanning all pre-market. But shit, by the time the market even opened, I would already be exhausted. So it just wasn't for me personally. But I'm mostly scalping right now, so I don't need, out of a few setups that come a week, really need to be there to get the best entry. You know what I mean?
Yeah, and I am with you. I am, like I said, it used to be 4 a.m. Now I'm in the gym, 10 a.m.
There you go.
Usually the driving range. I mean, as in my time, which is like pre-market. So I'm usually getting to desk again the same. I usually get like 8 o'clock is usually when
It's good that you're swapping it out with productive stuff, though. I'm just laying in bed.
Well, I mean, let me. I mean, I am still getting up at like 8:30 or something like that my time. So it's just the perks of one of the perks of the time zone has. So Adnan, what about you? How did your? I mean, what time are you getting up? It seems like we're going.
Yeah, I'm not much of a morning riser myself. I'll get up like an hour and a half before the market open. But the way that I trade is I kind of need to see the price action off the open, like the first 10, 15 minutes. So I've kind of found that, like, similar to this, that like if I go too deep, like researching really hard, or even doing some pre-market stuff, like I might not have the best like trades off the open, because like that's kind of my bread and butter, is just to kind of wait for the stock to kind of set up and let the volume and the price action really tell me a story before I build any sort of bias. I mean, I will do like a little bit of like ticker analysis, see how it did on previous days it gapped up. Does it have a history of gap and crap? Like that sort of thing. But I like, yeah, it's something that can be done like in 30, 40, 50 minutes, right? So yeah, I'm not too much of a early prep type of guy either. So I'm with Thiz on that one.
Hell yeah, man.
I think we might be in a similar boat. When we'll come to Stan in a minute, because I know what time he gets up. So I know sometimes it's stupid early, and I know sometimes he has to sleep in. But Emma, just to pick up a point there, you just touched on like looking at its history. I mean, in terms of like for someone watching this now, what is the easiest way for them to get an idea of a ticker's history?
Well, I keep it pretty simple. I'll just open up the daily chart and see how it kind of reacted on other days where it gapped up, right? And oftentimes the best faders are a lot of the time there's stocks that 9 times in the past 2-3 years they've gapped up and crap. So it kind of gives me an idea of like what to maybe expect, and like something like that, it might be worth taking a position in pre-market, expecting a crap right off the open. Um, but yeah, like it's nothing too crazy. I'm just going into the daily chart and just seeing how it reacts in other gap days.
Yeah. I mean, to be fair, I wore my looking left T-shirt to the gym earlier, actually, but I mean, I'm the same. Just look left, and I mean, Stan. That's always something that we talk, particularly with like the sessions that we do in IU. We're always talking about having how much easier a trade is when you've got detail and something to go by looking left.
Yeah, it's something that at least for me, it's I use it to start building conviction. For me, as far as determining an entry and actually executing on it, that takes the confidence aspect. But then, the more information I have about a trade, the more I can be convicted of one way or another, or be neutral. And just if we're just sideways for 45 minutes, then, or 2 hours, then what am I doing in there, right? But it's important to keep all of that into overall context.
Yeah, no, absolutely. And Mo, what does your prep look like? Are you still getting up at 4 o'clock every morning?
I can't help it. Not necessarily 4, but yeah, I wake up early. But I'd like to point something out, if I may. I think sort of all of us, because I echo the sentiment of all of you guys, which is prep. Not that much, but I think this is meant to be for people that are watching that might want to learn a thing or two and stuff like that. And I want to point out that we might not, as a whole, spend a lot of time per se prepping, but we're ready. It's just that our knife is sharp, and so it doesn't take us that long. And so for those that are watching, I don't want the necessarily to take away to be, I don't have to be ready. You damn sure you have to be ready. It's just that we are ready. You know what I mean? And so for me personally, and then as far as that's just a general thought I had.
Yeah, well said, bro.
And
I agree.
thank you. And then specifically for me, I wake up early, and sort of the process that I go. I live small caps day to day, so I know what's going on. But I'd say the one thing that I like that's part of my process is, so I touched on, I look at this in a lot of ways. I look at this from a behavioral finance prism. That is to say that there is sort of 3 tiers of participants in small caps. There's the whales, there's the retail, and there's the operators. And I try to understand the psychology behind everything that's happening, and then pick and choose my names and spots. And so one thing that I really like to do is I have, I used to have a spreadsheet. Now somebody automated it into a website. And what it does is it gives me all the runners of the day. And it gives me all of the metrics for each runner that I like to know. And it tells me, immediately it tells me, is there a theme? Is there an odd one out? Is there, what's in common to everything and what's different to everything, or what might be an odd one out? And I sort of look at it in that way. I look for, that's the odd one out. I'm focusing on you. And so that's one thing that I do in general, whether it's pre-market or regular trading hours. And, the other thing I do is I trade. I love both sessions. I trade both sessions intensively, and I treat each session separately, and that's part of my process.
Yeah, no, I think that's well said, and that is like there's definitely a disclaimer there that I mean I used to literally trade 4 till 8, and I know you I know you still do. I know Thiz mentioned that you used to do it. And I think that just gets to a point where you're like, geez, this is. I mean, I want some longevity in this as well, and I think that was it for me anyway. Because as soon as I started trading at 4, before I knew it, bang, it was 3 p.m. Eastern, and I'm like, where's my day gone? I haven't eaten, haven't been to the gym, and for me now, I haven't hit a golf ball, which makes me cry. So, Chris, coming over to you then. So you, like you said, like you know when to select when to like narrow your gaze onto small caps. So, in terms of what like sort of prep work are you doing then to know actually today, perhaps I want to pay extra attention to small caps?
Yeah, so like you said, depending on the market cycle and like where money's going, where there are setups, that's kind of where I put my attention. But it used to be I would just like read all the time, like research reports, like whatever market I was focused on, like that's where I would just spend all like my time. But I have to say that over the last couple of years, got real spoiled with IU because instead of having to go out and look for everything, now everything just kind of piles in, and I just have to like sort through it. So that's been a good change. So like now my prep work is basically looking at like pre-market scanners, looking at the AI news that comes in, and then looking at the other traders, what's like on top of their list. And then I kind of see what fits in with my, watches and everything. But, one thing that I like about trading with other people, like there's people like Stan and you in the room and Nate and everyone, but people talk about having like indicators on their charts, and they'll pay attention to like, random moving averages or whatever else. But like the people that you trade with, those are also great indicators. And you could have someone who's been trading for 5, 10, 15, 20 years of a couple setups. And like when something pops on their radar, it's like, that's an indicator for me that, it should be on mine if it's part of my thesis. So I like just being aware of everything that's going on, and then, kind of zooming in or narrowing in when something makes sense to me.
Yeah, and I think and correct me if I'm wrong, but I think you turned your gaze yesterday. You knew with MIRA, for example, that something was setting up. Now, I suppose, did that originally come from the room, or is that something that you were tracking?
Yeah, that came from the room. And, initially you just kind of see like, okay, this is setting up in the morning, this is gapping up or doing whatever. But then you kind of just see the telltale signs of like, how is like a structure playing out? So you have something with a limited float, something that's very crowded on the short side, high volume, holding higher lows. And then you kind of dig into the level 2. And that's when we were seeing like some of those big bids pop up, and, those big offers pop up. And you basically just kind of like piece together the puzzle of like, okay, do you think that that's like a natural retail trader putting up a 600,000 share bid or offer just on there? It's like, no, it's clearly someone's in there trying to bait shorts and do things. And then you just kind of take into account like the circuit bands and everything else. And you just kind of see a setup forming. And when everything kind of aligns, that's when you know that, it's a good risk reward. It's a high probability of happening. So those are the kinds of things that I like to do.
Yeah, well said. And last but not least, Stan, your prep, I don't know if you have the furthest west time zone here, but I know you're not getting up you're definitely not getting up at 4 a.m. I think that's when you're going to bed, right?
Yeah, well, sometimes actually I do locate chairs before I go to bed. Yeah, that happens, which for me is 1 a.m. But yeah, ultimately for me, it's waking up. I wake up around 5:30 or so, which is 8:30 market time. But that provides me plenty of time to take a look at what's happening and kind of get myself situated. And it's always a process, right? You don't, as I do share some of the same feelings as everybody else here on the session. As nowadays, it doesn't take me 10 hours to get ready, or 5 hours to get ready. It's very quick. I already know what to look for. I already know what I'm familiar with, and I just need to scan for it. For me, it's more about aligning how, to Chris's point, aligning how other people around me within my circle are feeling about a particular ticker or a particular setup, and then using that information to be able to take advantage of the opportunity, whether larger size or depending on what the overall feel is. But in terms of a routine or something that I follow strictly every day, no, that's not really not the stage right now. But I have spent years, honing in and perfecting a process that it's never perfect, right? And it's the designed. Its goal is not for it to be perfect; it's for it to be applicable to your current need in time.
Yeah, and I do think like because I remember when I just remember like seeing a lot of tweets like back in the day when I used to be on Twitter more, but sometimes the first question would be like, say someone shared like MIRA, for example. Yes, they shared a chart that they traded it, and the first question would be, where did you find this, or how did you scan for this, or something like that. And I'm thinking that's that. I mean, that should be the least of your problems in terms of that's actually like the easy step when it comes to trading, in terms of having something on your radar. You should know actually, I should have seen it, should have seen some of the action, should have decided actually, is this something that I want to pay close attention to. And I do think as you get like a little bit more experience, then like my prep time used to be hours and now it's probably an hour and a half. And I do think it having those, like you said, though, Stan, having those people around you can help speed that up as well. Because you can, if all of a sudden you got 3 people and you're messaging them and they're like, "Oh, I'm really focused on ADIL today," for example, then all of a sudden I'm like, "Hang on, I know this is going to be a really good setup." Now, Adnan, the next question I wanted to follow up with you was you touched on like, so you obviously touched on, you look left, you're looking at the daily, you're looking at its history. From a fundamental point of view, obviously, like a lot of these small caps we could be trading, they could be like biotechs with some sort of phase 1 news, whatever it is. Are you doing any research there? Do you care about the news? Are you looking at the news, or is that just something you disregard?
I don't really look too much at filings or even news. I mean, I will definitely take a look at the news just to, make sure that it's nothing major. Something that could be like a reason why the stock actually should be worth a lot more. Um, but yeah, I'm very much focused just really on the price action, which I think comes to a lot of people's surprise, but it's just been kind of the way that it worked out for me. Just really just price action and how like historically that the price has reacted on gaps. That's really kind of been my bread and butter. But yeah, not too much on the fundamental sides. I mean, I will look at the float and whatnot, but not too much after that.
Yeah, no, that's fair. So is there ever a time where perhaps there is a PR that had potentially a red flag, or even if, I don't know, they had news with Elon Musk buying 10% of the company, or I don't know, whatever. I'm just thinking of something that would be obviously a very good PR. Is that something you would then pay attention to, or again, just purely price action?
Yeah, I mean, yeah, I think in small caps, there's always been this theme that whenever like this has been going on for like the last 8-9 years, where like a lot of these small cap stocks will attach their company with like a big, large tech company that's doing big things at its time. Back in the day, it used to be Apple, and now it's like Nvidia or Microsoft, right? So that theme has kind of always been there, where small caps will put in these bigger blue chip companies into their PRs, and those ones always seem to be the best returning, or the ones that kind of just all day trend up, and they squeeze big too. So yeah, like that's really all I'm like I have my radar up for, but outside of that, not too much.
Yeah, and I know that Mo, you've already touched on the when you are looking, that is something that you will pay attention to. In terms of like your broad scope, when you are doing your prep in the morning, how much attention are you paying to the fundamentals? And I suppose like with small caps as well, like in terms of fundamentals, obviously we've got the news as well, but like throw in like potential dilution, cash, etc.
Is that how we're defining fundamentals here?
Well, I mean,
Like,
you're the boss. You define it.
I don't think anyone is looking at small caps in the classic definition of fundamentals, but yes, I do care about the PR in the news or the lack thereof. Or like what I am trying to understand is the catalyst for the move. There could be, I want to know the catalyst for the move so that I could categorize it and know what I want to do with it. So fundamentals. I don't know what the definition is in shitcoat land, but I want to know, is it moving? Why is it moving? Why is it moving? And if I can understand why it's moving, then I could go from there and see if it's something that I can think I might have a plan for or not. And why is it moving? If could be any number of things. It could be because of a PR or a filing of some sort. I do want to know the catalyst. And so that's what I search for. As far as, fundamentals proper, nah, man, like let's be very honest here. Most of this, like if you open up a chart and you zoom out a year or two, if it's going from here to here, you know what's up. You know what I mean? And so there isn't much to get fancy over here. I'll keep on going back to like the my little thing that I'm hammering on, which is behavioral finance or just crowd behavior. And my question is this thing going to stick? Is it going to stick? Is momentum going to stick here or not? Is this, like you said, if somebody puts a PR where Elon Musk bought 10%, like there are certain PRs that we know they're going to have impact, or there's certain scenarios that we know are going to have impact. And so I look at the picture in the whole and I ask myself, do I think there's impact here or not? And that's really it. There's all sorts of things to go into that, but that's it.
Yeah. So as a follow up, then, like you've touched on, obviously, like I know you've touched on behavior a few times. Can you just like break it down, like in terms of like, so you just mentioned like crowd behavior. So what exactly does that mean? What are you looking for?
Well, let's take today's example, right? So I traded the pre-market today. I shorted everything, and I cashed up around 9:29 a.m. And I was telling my buddies, the stuff that stayed weak, the stuff that was weak is going to stay weak, and whatever isn't weak right now. What's going to happen is you have the transition from pre-market into market hours, and so some people don't trade pre-markets, all sorts of reasons why, right? But what's going to happen is people are going to my speculation, my guess was that people are going to look at all of these crazy faders, and they're going to be like, well, where's mine? All the guys that didn't, the guys and gals that didn't fade the pre-market stuff. They're going to show up on open, and whatever's up, they're going to short it, and they're going to get into a headache for the morning session. And I literally wrote it out to my friends. It wasn't even about anything other than the time of day. I was like, let people fight the headache. Wake me up at 10:30, 11, and that's a behavioral thing. It's looking at the crowd and trying to guess the mass psychology and trying to see where you might fit into that. In the same way that we look at a mirror, the day before, and we're like, well, I know that the next day is going to be a hell of a lot of long chasers, and because there's going to be so many names chased, there's not going to be a concentration of volume. So I know how I might be able to trade that either long or short or both. In the same exact way, you do that. You look at the pre-market action and you might be able to make some educated guesses into how that translates into the regular trading hours. And it's not like you could do that all the time, every day, but there are days, there are scenarios where you could do that. And that's what I mean by that.
No, that's well said. No, thank you for clarifying. That's really well said. And Thiz, you've already touched on the, well, I think you've said you don't look at the news.
Well, it's like, yeah, you want to know why something is moving, but it's more of like I look at it, it's like, hey, what's the news? All right, maybe maybe a general thought of like what we could do with that kind of news. But man, for me, it's more of like if this, then that, you know, like setup comes first. So if I find something that's got the potential, then it's like, all right, well, if this, then I will do that, and if not, and this, then I will do that,
Yeah.
it's pretty much how it goes. There are certain case scenarios where I'll pay more attention. Like let's say I can't remember, I don't know if it was sewn or there was something. Well, like let's say something's been up for quite some time, like maybe a week or two, and it's just not breaking down on the daily. But ideally, it would be a popular name, and then let's say PR just comes out, something like that. I might pay more attention to. I'm like, all right, maybe we got like some type of liquidity event here. Maybe they'll use this. Maybe we'll get the actual breakdown type thing, like something like that. Yeah, I'm gonna pay a little more attention, but I think from day to day, like you just wake up, you look at, you open your trade ideas or you open your IU scans and you see your names on there, it might be a little less significant um, for me personally. But I think even a lot of people might be willing to agree with that.
Yeah, I think that's a great point. And just something I really want to pick up there, you talked about like if this happens, if X happens, I'm going to do Y.
Right.
But what does,
So,
yeah,
so um, when I look at a chart, right, and like let's say, okay, oh, nice chart, like I might trade this, right? I have something in my head, like I have an idea of what that's gonna need to look like in order for me to trade that. And so, like my head instantly will create the two most probable scenarios or the three most probable scenarios, and I'm almost like it's almost like a net. Like I got a net, and I'm just waiting for the price action to tell me which net this stock is gonna go into, and then I'm like, all right, if this, then that. It goes into this net. All right, we're reacting like this. And there might not always be three nets on any given setup on how to act. Maybe it's just one net. It's like, okay, hey, we could do this, and if we do this, then I need to act in this way. And then if we don't do shit, then I'm not going to do shit either. And that's pretty much how it goes. And a lot of the times, I mean, man, I've really adopted. Honestly, that's something that Stan has really hammered into my head this year. If we're being honest, whether he realized or not, I used to be the guy to really try to force the bias. I'd be chasing tops. I'd be. I mean, I don't get me wrong, man. I'm still a sucker for a really good extension. But I'm really waiting now. I'm like, all right, like if top here, then I want to see bounce, and then if stay heavy here, I'm gonna lean some. It's not something like that. It doesn't have to be super complicated, but it's a good way to maneuver, in my opinion.
I know, I love that, and that's very well said, and that's literally like the plans when I write them up in the morning. That's pretty much what I'm saying. If X happens, I'll do Y, and I know always
Right.
there's always a reminder for myself is I always just write, and it sounds stupid like writing it every day, but I always write.
But if you think about it like that, you always have a plan.
Yeah,
I
And
wonder-
then if you don't, it's like, hey, if squeeze, do what? Like you don't do anything. You know what I'm saying? Like there's always a plan.
Yeah, you don't want to freeze. And Adnan is.
I'm sorry, I didn't mean to interrupt you, man.
No, I mean, no,
I think he was going to add.
You made a great point, and no, feel free to interrupt me absolutely anytime. And Adnan, I want to throw that over to you as well, because I know you've touched on you're looking left. You've looked at the news. You're not so worried about it. You've got a plan. How granular are you going into that plan? Are you doing the same? Like if X happens, I'm going to do Y.
Yeah, I think when you're, especially if you're on the discretionary side of trading, like that if then statement type thing is like, it's like very crucial. And, but yeah, like I typically have like an idea of what type of price action we might see. Like, for example, like today, I think Mo said it very well. I can't articulate it as well as he did. But I think there was like this general sentiment that like you kind of knew that there's gonna be a lot of chasers today, and a lot of the stuff that was weak in pre-market, like it was just going to continue fading, right? So like it's almost situational, right? So like I did take some of those weaker stocks in pre-market, 925, 926, 927, and just took small shorts in like 3-4 of them and just kind of faded them off the open because like it's kind of situational, right? You kind of see that, okay, there's these 2-3 plays that are probably going to be up quite a bit, and no one's really paying attention to these bottom 25% of or like they're like relatively weaker compared to like some of the other stuff that's popping up, right? So you can kind of expect it to go under the radar. But I think on most days, like I do want to focus on stuff that is kind of going under the radar, and like you kind of see when like there's only one or two plays on the day, things can get very, very tough, right? Because everyone's trying to trade it, longs and shorts, and the price action just gets jammed up. But on a day like this, where it's a lot easier to kind of make reads off the open and see, like, have an idea of, okay, this one's probably going to stay weak, and it's probably best to stay away from these first two and kind of evaluate mid morning going into the afternoon if there's a setup there.
Yeah, and don't worry, not many people can say it as eloquently as Mo. I certainly can't. You're a great way with words.
ESL, baby. I did want to add some stuff to what Thiz said, if that's all right.
Yeah. Oh, yeah. Yeah.
I think he touched on some stuff that I think could be helpful to listeners potentially. He said two things that caught my ear. The first thing was that he said that whenever he's looking at a potential, I'm going to paraphrase, but I think that as a trade is setting up, he already has a visual or a couple of potential visuals on how it might play out in his mind already. And then he also had a couple of, he has if-then setups. And I wanted to like kind of plus one on those two things, because again, if the idea is to sort of try and deliver value to a listener or a viewer, then from all of my talks to with aspiring traders and all that stuff, I do want to say that what we're doing is not random. We have a visual in our mind when we are trading something. When we initiate it, before we initiate a trade, we might already have a visual in our minds. This is what I need to see in order to. And once we might initiate a trade, we almost certainly have a visual in our mind for the duration of this trade until it reaches a goal. And where that ties in, I thought where that ties in really well with his if-then statements is that we have, I'll speak just for myself now, and I'll say that I have every setup that I trade. I know what it looks like when it works. I know what it looks like when it doesn't work. And I know what it looks like when it's in between. I know that. And so I think that stuff is important to develop so that you could trade properly.
Yeah, no, well said, and as eloquent as we expected, right, Adnan?
Yes, sir.
And Stan, like, this is something. I think this is something that what the three guys have said. This is something that me and you have spoken about at the time, particularly on those midday sessions where we're talking about having a plan, X and Y, but also like how a lot of the time our confidence and our conviction from the setup comes from the fact that we've seen it, let's just say 100 times before. Because in the moment, obviously, a lot of the times actually setups look pretty shit until they look really good. I don't know if you just want to touch on that and add to their points.
Yeah, I think when it comes to it, it's at some point you would have to be able to walk that balance, right? That balance of here's what I've seen before and this is what it should look like versus do I need to adjust because of a dynamic variable? And it may not look identical to what it did before, but it's going to rhyme very, very closely. And an example that I keep giving is, like as far as trend lines, like I don't actually draw trend lines on my charts, but I do respect and use them a lot because they provide a guide. And very similar to Mo and to, this and Adnan, pretty much, I also do, I also have a visual, right? When I enter something, and it's not when I enter, it's before. The moment I glance at the chart, I already, within seconds, I know if I have a trade or not. And if I do, what it should look like. And if I don't, where I may have one. And also maybe I have potentially a trade later on to where it's worth for me to kind of stick around for a little bit and maybe go for a ride, for a little bit, because potentially, there's something good. So I think it's that fine balance of being able to slide from one thing to another, and apply your own psychology and behavior to what the market is providing. And if the market today is requesting you to be a trader, and you have to, when you short a pop, you have to cover the dip, then that's what you got to do today. And if you don't, then you're probably going to have a harder time today. And then there's days where you short at the open and you don't cover until 8 p.m. And if you did something else, then you've just ruined that expected value of the whole trade, right? You've just ruined your skew. So it's finding that balance, right? It's being able to adjust and then moving forward.
Yeah, well said. I see. We've got Stan and Mo competing for the eloquent answer of the night, as expected with you two.
I know the next answer I'm gonna come in here and be like, oh yes, well, the stocks, they go up and down.
This guy come with the suit.
I'll drink a couple more of these, and Stan will be the only eloquent person.
There you go.
It's good to see. Now, Adnan, something I want to pick up on, because it's great that you've, between all of us here, we've spoken about, in particular you three and Stan and Chris, touched on you've got years of experience, so you can recognize that action and right, pretty straightforward. I know, if it does this, I'm going to do this. What's the best way then for someone to bridge that gap from, say, wherever they are now in terms of no experience, no plan, to get to that point where they're like, right, I know X happens, I'm going to do Y, and then I'm going to have the conviction to hold it all day, or like Stan said, I'm going to short pops, cover dips, whatever that plan may be?
Yeah. I think a lot of it rests on just time in the market. And with that time in the market, I think it's really important for, especially if you're newer or you haven't seen the different cycles, is to really go deep and try to categorize all the different type of setups that you see. How do those setups change, right? How do those setups change when there's different amount of range? How does it change when there's a catalyst maybe pushing that setup along as well, right? So you really just want to spend as much time as you can watching the markets real time and categorizing those stocks at the end of the day and putting them in distinct categories, right? Okay, this is a failed breakout setup and this is the time it didn't work. And then you can have a whole database of all the times that the failed breakout setup that you're going for didn't work, right? And you can kind of piece together the common denominator out of all of them, right? And then you can also see the same sort of thing for the ones that do work. But yeah, I do think that a lot of your reads will get developed the fastest, or not the fastest, sorry, but they'll develop the best when you kind of have to just spend as much time as you can monitoring the market day in, day out. And then you kind of start to develop that it's almost like a deja vu, where it's okay, I've seen that before in this sort of circumstance. I can expect this to fade 30-40%, right? It's kind of you just have to see it over and over again. And then you kind of start going okay, I've seen this the past 4 or 5 times and I've categorized it. So going forward, I know what to do when it pops up.
Yeah, well said. I can see you nodding away, Mo. You're just in agreement, right?
I agree, and I think he's touching on a very important point as well, because again, I keep on coming back to the perspective that this is meant to deliver value to somebody. And over the years, as I've tried to teach this to people, as I'm sure we've all have, throughout the years, there were incarnations of how I would try to teach people. And in my most latest iteration, a couple years ago, I had an aha moment that really, really hit me. Where I realized that, because what I would do is I would, because Adnan was talking about, time in the market, which is the correct answer, of course it is. But he sharpened that answer a little bit, and I want to sharpen it even more because I found it to be so. That's it. That's The last person I tried to teach how to trade, I've been teaching him for about 2 years now, and he's doing really, really well. And what I realized when I tried to teach the last person I tried to teach this guy was that I can't teach you, oh, if this price action then dot dot dot, or if this thing then dot dot dot. No, 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 no. Every setup is specific. You know, if you're dealing with a tight halt band situation, then you need to understand all the permutations of that and understand what causes which, because it's not going to be the same for a similar stock that doesn't have those tight halt bands, et cetera, et cetera, et cetera, setup after setup after setup. And so I found that, to me, and I could be wrong, but I found that I found that every setup has its own nuance and its own signal. And so you sort of have to, it's not like, oh, well, an exhaustion is a million plus volume candle at an area where, you know, price can't go any further. Sure. In some setups, you know what I mean? In other setups, that's just the beginning of the move, baby. You know what I mean? So timing the market and understanding, and into my opinion, for whatever it's worth, understanding every setup specifically.
Eloquent as expected, and I think that's a great point, and something that, like, as a nuance that I've added is, like, I just call it like an outlier move, like something like MIRA, for example. Like, I expected that to bring the heat today, so I have different notes on how to, like, on how I'm going to trade say something like ADIL was something I traded today. Like, I have different notes on what I'm going to do on a post outlier day, and it would basically be, I'm just going to be more patient and wait for sort of 10, 15, because I'm expecting the range to be larger than I would expect, say, if it happened last week. Like, if it happened last week, maybe, I don't know, 225 would be the top. Today, 3 was the top. And I think that's probably down to the environment on the cycle that we're in. So, yeah, no, well said, as expected.
It's just because, like, when like, we'll throw tidbits and people will, I just know with 100% certainty, you'll throw tidbits and people will take that and they'll try to apply it to stuff that's not relevant to, you know what I mean? So that's really what that's about.
Yeah, no,
and you're right. Like, looking, basically, I think what you're saying is that, like, if a deal came in a different day, you'd have a different expectation for it. Today, you know what I mean?
Yeah.
So yeah.
So for everybody watching, I agree with what this guy is saying. I haven't been on something like this in a while, so if I'm throwing tidbits, in beef,
Oh no, it was not. Yeah, sorry.
But like, it's something that people who are a little newer could do if they're kind of listening to this and like, all right, well, like, how can I do that? You know, like, what can I do to kind of know what my setups are? Just sign up for something like TraderView or sign up for something like that, and import your trades, and everything you import, you could put it into a category. At the same time that you're doing this, record your screens every damn day. You can go get, I have like it's like a rugged USB hard drive, and just download OBS and put everything on that hard drive. And what you do is you can go in, and you have a really bad trade, you had a really good trade, whatever whatever you're trying to look at that point in time, or whatever category of trade, TraderView will show you when you took that trade, and you can just open up your recordings and go in and just, like, watch them back. Get familiar with the tape. Watch your setups. Know exactly what they do, like he was saying. Know what it looks like when they fail. Know what it looks like when it's not failing. You know, have an idea of the amount of time that it takes from entry to either the point of a winning trade or a point of a losing trade. You know, what on average, how long does that take from entry? That's what I did personally, along with a lot of screen time. But yeah, I did categorize my stuff too, and that's the method I use personally. Just put it into categories on TraderView and went back and watched the tape for hours.
Yeah, no, I think no, well said. And I do wonder sometimes, and I, like, when I've had these discussions with people, that's often like one of my first questions is like, okay, like, because I often think when someone shows me a trade, it's like, what do you think of this? Well, actually, first I want to hear what you saw in it. What setup? What are you calling it? And I think, like, it's such a basic thing, but like, how many times do some people, like, not even have a name for their setup? And I love, like, something as basic as that, because then I'm like, if I've got a name for it, then it's not random. it's something that I have a plan for, and something that I will trade every single time that I feel it. So I couldn't agree with you three anymore. And I think that, Debbie was saying some definitely some great advice there. One thing I did want to do is just come across to Chris, because something that Adnan mentioned was talking about like dollar flow, and sort of like, let's just say like in a given day we have, and you've touched on this before, like how if there's one stock in play, people are looking, so they got $1 billion, whatever it is, gross, it's going to flow somewhere. And sometimes you get those moves where it goes all into one ticket, whereas today we had 10 plus whatever running. So all of a sudden that flow is spread everywhere. And as a result, it can't be sustained. I don't know, I just was thinking about, because from like a viewer's point of view, that's something that I think is really important to think about. Like if you've got only one thing moving on that day, that's where that flow is going to be.
Yeah, kind of like the breadth of the market, and we talk about this a lot with cycles, and there's like a couple of ways that this can show up. So one of them is like, if within a small cap cycle, if you've had like a ticker that like just totally faded 80% and like it was super easy and everyone nailed it, like that's something to pay attention to, because the next day short sellers are looking for that kind of same thing, and they might nail it again, and then the next day something else will come along and they pile in, and people get more and more greedy as something works, and they'll push it to the point where they basically make it not work and it will go against them. And the same thing happens on the long side, whereas you have this big outlier move, it goes up because of very specific conditions, and then everyone's like, I'm going to nail the next so and so, the Myra or whatever it is. And so then you'll have longs being more aggressive and chasing things up that don't have those specific things. And so like what I like to do is I like to reverse engineer moves, like see what happened, and then just really think about it in terms of supply and demand. And so like, for instance, with longs chasing something, if you have a lot of longs that are looking for something to go up and they're buying it at any price because they think it's going to go higher, and suddenly it starts to go against them, you have a lot of supply that's there now. As people start to stop out and everything, that's how you get those big, clean flushes. And the same thing, when you have a short squeeze, if you had something that went down super cleanly and now all these shorts are getting very aggressive, they're sizing in double what they were before, and everyone's on the same page, and all of a sudden it's not really going down anymore and everyone's in full size, and then it swipes up. It's because you have a lot of deferred demand from shorts that need to get out. And so just taking big moves, taking the cycle into account, and then reverse engineering and just thinking about, where was this supply coming from? Where was this demand coming from? And then trying to recognize that when you see it again.
Another person stepping up for the eloquent trophy of the night. Thank you, Chris. And we're coming up to, we're over an hour now, but there are two things that I desperately want to cover. Jude is not on tonight, but something that he always talks about, and quite rightly so, is risk management. Now, I think like when it comes to small caps, it's extremely important. I think that goes, without saying. Just in terms of like for you three, I'll come to you first, Thiz. How would you define? What is risk management to you? And how would you define it? How would you explain it to someone perhaps on the newer side?
How would I explain risk management?
How would you explain yours in terms of how you're like? Obviously, like if you're like, say you're long something, obviously it's important that you have like an exit, whether it works or not. Like, are you typically is there some sort of like support break, a lower day, whatever? Like,
yeah, I'll be honest with you, man. My risks are like very black and white. Some people give some room to wiggle as far as like pivots or key areas. I don't. Like if I know, I don't know, just use $1 for example. Like if I know something's is coming up to $1 and it needs to go through there in order to continue higher, but we're pretty extended and it let's say it stalls out there. When it comes back to my entry, like I would get out break even. if it doesn't even do that, and it just, let's say I'm getting in, there's some bit of support here, I'm getting in here. I mean, if it cracks that, I'm getting out, bro. I'm not gonna play around. But you have to remember, I'm a scalper. So if it was to soak that, right, and look to start creeping back, like, I'll just get back in, and rinse, repeat, that kind of thing. Like, on the short side, similar jam, but on the short side, I've been trying to adopt being purposely late. So take what I say with a grain of salt. But like on the short side, like when we get that failed breakout, um, there's no need for me to wait for it to go past that. Like if it's already failed to break out on high day and I get in as close to that failed breakout as I can, my risk is that new high day or that pivot where it failed to break out or where that offer came in to walk it down. That's what risk management look like for me. But I think it's important to say that risk management is arguably going to be the most important thing you need to focus on in your career. Like setups are great. Um, Risk management should be one of the things that you don't stretch. One of those things that you don't like. You don't like. You obey it. It's just like that thing. Like it needs to be on a stone on the wall of your room or something, and it's just like you just listen to it. You need to know what your risk looks like, and you need to obey it. And I think it's important to have realistic risk too. Newer traders, myself included, when I first started trading, I didn't know where the hell to put my risk. I was just like, oh, this looks like a good place. Like, oh, that looks like a good place. Get familiar with good areas of risk, and those are usually going to be in areas where a lot of people are going to be wrong.
Yeah, absolutely, well said. And I think, Adnan, it comes back to perhaps the conversation we were having a minute ago about, and Thiz mentioned it, Mo mentioned it as well. Like you characterize these trades, and I think first and foremost, like know when you're wrong, right?
Yeah, 100%. I definitely know when I'm wrong, and and I think I think everybody here can still be guilty at one time or another of well, I'll just see what it can do, or I'll just see what happens.
I
And
did it.
I think everybody here will say that those are probably like following that thought is when the worst things happen. So
yeah, and I did. I've only, to be honest, I've only done it once this year, and it's always when like I did it once, and I was trying to anticipate the range,
yeah.
and it just happened to like expand way further than I expected, and I ended up taking that was bang. That was my biggest loss of the year, and instantly I'm like,
Dude,
shit.
that's exactly why I keep it tight now. It's because the deviations in what it looks like when you can be wrong are just insane. Like the last year or two, um, it's harder to be a good loser in my opinion, especially on the short side right now. So I think it's important to obey risk. And dude, if you're new and you're not sure, like hit up Stan. Bug his ass. Message him and be like, hey Stan, what'd you think about my risk in this given area? It doesn't always have to be like, damn Stan, what did you see? Show him your trade, send him your chart, and be like, hey Stan, what did you think about how I stopped out right here? And dude, I promise you, Stan is like, that guy can give you a great feedback. Great feedback.
Yeah, absolutely. I'll come to you.
Appreciate it.
I'll come to you in a second, Stan and Adnan. Well, I suppose anything to add, because I know you've taken big losses before. So anything to add on that, and like, what does it typically look like to you? And I suppose like another question is like, as an adjunct, are you having like similar? Do you have a similar risk in terms of like dollar amount, or are you always looking for that to be, very
Yeah. For me, like I will, depending on the volume and the range of the stock and just the quality of the setup and like what I'm kind of expecting in terms of profit factor for that specific type of trade, I will have variance of how much risk I'll put on, right? Because obviously I want to put on more risk on the better trades. But kind of circling back to what you initially asked was, I think one thing that was a real game changer for me, especially recently and going back a few years when I first started, was having a max ticker loss and a max daily loss, because as a short seller, you're only one bad trade away from getting wiped out, right? Especially when you're in this small cap space, right? So, I mean, like I have a rule where, like, if I lose 3 units of risk in one given day, like I'll be out, I'll be locked out, and I won't touch that ticker anymore, because and then also that max ticker loss level is, you want to go back and find out strategically, like using a journaling software, is where is that trade off in your trading where, that max, there's usually a point in your trading where you hit this X amount of loss on the day, let's say it's 20,000 or 30,000, where just the odds of you coming back and even breaking even or even having the next trade be positive on it, it's really quite low. So you want to kind of go back on your trading in your journal and find out where that pivot is in your trading, and put that as your max ticker loss, right? And the same sort of thing with the max daily loss. For me, that was a really big game changer, and it puts you in a position where you don't have to crawl out of a drawdown for weeks and weeks, sometimes even months and months, when we're more of a gunslinger back in the day. So I like that. That's super crucial. And like when you're able to control your drawdown, that's when you can actually push the pedal on when it's time to push, right? Because you're in a smaller drawdown. Maybe it was tough for shorts first 2 3 days, but your drawdown's in control and you're still there for when that shift happens, and it comes when you start to see those easy fades again. Like for example, today, right? There was a lot easier fades, but like you had to be in a position where you didn't draw down massively the past couple trading sessions.
Yeah, and I think that can be the issue sometimes, is that is the issue, that taking small caps, you need to capitalize on, say, a day like this. And actually, if you're not in the right mindset from yesterday, say you did take an outlier, L on MIRA, for example, it can be very difficult, I think, to have the mindset to come back and be like, I'm ready to be aggressive and to attack today. Do you think is that fair?
Yeah, for sure, for sure. Yeah, you don't want to be compromised at a psychological level, and uh, psychologically, and even in terms of just your account balance and whatnot. And you don't want to be in a 30-40% drawdown and lose your confidence, and then you see 2 weeks of easy fades, and you're not there to participate at all, right? So that's like one of the worst case scenarios, oftentimes.
Yeah, or the worst is you like had to downsize so much, and then you're like, you have the 2 weeks, and you're like, shit, I could have literally, if I just traded my normal size, I'd be out of this drawdown and some. But anyway, well, I'm sure we've all been there. Mo, anything that I know risk management is extremely important to you. Anything you want to add, like in terms of particularly when the trade's going against you, when to get out, when to take some pain, what would you add?
Is that the question? When to get out and when to not get out?
I'm just trying to think of a way, like, as in terms of like a lesson, like if someone was to take something from this, like in terms of like, because there's lots of like some of the cliches, like cut your losses quick or whatever. And I mean, in certain styles, that's great, but I always think like you want to cut them intelligently. And equally, like something that Stan always talks about, you got to be either very proactive or you got to wait until you find out that you're wrong. So, I mean, how are you approaching it on a day-to-day level?
I'm not sure, man. Like, there's a lot of my trading is automatic at this point, and so half the time I don't even know why I'm doing what I'm doing. It's just not that I'm doing something I don't like. I'm unhappy about. It's just so automatic that it's automatic. But I guess I think that those guys said two things that are very that are very true in general about risk management in general. Not per se the question that you asked, but to Adnan's daily max loss. If you're a short seller, with all due respect, that's not optional. You do it or you'll be out the game tomorrow, next week, sometime. So with all due respect, that's not optional. And to Thiz's point about one thing that I sort of read from what he said was one version of risk management is that you have very intentional averages on your positions, which is I think that's in between the lines of what he said. I don't know, but that's what I heard. And so you have very intentional averages that allow you to make easy decisions if you need to take a loss. And if and there's something that Taco said. Is it Tim? His name is Tim. So something that Tim said one time. He said, I don't like in his current incarnation as a trader. He said, man, I do not like to be at a loss, not even a few $100s. I don't like it. And so that level of intentionality in your position is something that I think is admirable. And if you find yourself as the viewers, if you find yourself in a situation where you're constantly read on a position and you constantly have to make these difficult decisions, then the issue is not risk management. The issue is before that. If you're doing the two things that these two dudes said, which is intentional averages and daily max loss, I don't really know what else is there to talk about, man. Just trade. Your winners will be great, and your losers will be predetermined.
Yeah. I mean, losing's always gonna suck. I think that's just the absolute harsh reality of what we do. One thing I would add though is that something that really helped me. Adnan touched on journaling software, and I know Thiz did as well. But one of the great things about the journaling software, it gives you an idea of it doesn't give you. It tells you what your win rate is. And I don't know what you guys, but I hover around 50%. So I know when I have any given entry or trade, I know already I'm going to be wrong half the time. And for whatever, I don't know what it was, but that just really helped me shift my mindset to be I'm wrong half the time. Could be now. Could be tomorrow.
Dude, mine's even lower, so I feel you.
Sorry, what was that, Thiz?
I said, dude, mine's even lower, so I feel you. I feel you on that. Going in and just expecting to be wrong.
Well, I think that's a fantastic point. Yeah.
And I know, and when you hear Kulamagi talks about his win rate, and he went up to 100 million plus with a win rate of 30%. So I mean, win rate means bullshit, but I mean it just means that you've got to be. I think it helps to be aware of that, so then you go right. I'm gonna cut my losses. I think that's always difficult. Perhaps the inverse of that is when someone's with a really high win rate, actually you're not used to losing, and at that point, then it can be quite difficult. I know, Stan, you're probably busting too. I mean, me and you had so many great chats on this over the years, and something that we've always talked about is when you're wrong, in terms of we touched on this a few times, that you need to be wrong in the right spot, make the right decision in the right moment, so you're not then forced to. It's then not taken out of you. Then that decision then taken out of your control of your hands at a later point.
Right. Yeah, absolutely. I mean, and I think, as far as I'll just touch on the risk management aspect first real quick. And that's just, you're a risk manager first and a trader second, in that order always, because at the end of the day, you need longevity to make this work. If you allow yourself the time, the longevity, at some point, it will start to make sense. Whether it's 2 years, 5 years, 10 years, everybody's different. But without risk management, you just simply don't have that.
Yeah.
Don't have that aspect. And then in terms of the, what we've always discussed in the past is you have to, as you create a thesis, as you enter a trade, you have to have some sort of a spot where you're wrong, right? And can you change that? Yes, I understand the market, it's variable, it's dynamic, etc. You can change that. But for me, if I'm going to adjust my risk level, I mean, there better be a darn good fundamental reason to do so, right? Like a PR hit, or something fundamentally shifted where it's black and white. It's not my opinion, right? Other than that, it stays put. And it's really about that. It's admitting that you're wrong. And I think where it hurts is traders often don't allow themselves to be wrong, right? It's if they experience a loss or something, they make themselves wrong because they tie the outcome of the trade to their capability as a trader, which no, the outcome of a trader is random, right? That's the probability, that's the field you're playing in. So if you attach that feeling, right, if you attach your worthiness to that, then yeah, expect that type of mixed results.
Yeah, no, well said. So we're coming up to an hour and a half. There's so much more I want to talk about. So I think we're just going to have to come back for part 2 in a few months. I think Mo's a few beers from falling off his chair. Just before...
You know what I'm saying?
Yeah, I know what you're saying.
Yeah.
So just before the last point, where can everyone find you? Let's go Thiz first. Where can people find you if they want to get hold of you?
If you're actually looking to message me, Discord is probably the best bet. I think they got rid of the numbers on Discord recently, so it's literally just Trader Thiz. Twitter, same thing, but do not message me on Twitter if you want to reply. I get so much spam. There's just no way. But I'm not in any rooms right now. I'm in and out of IU, but that's not an IU thing. That's a Thiz thing. I took some time to just step back and like really do my own thing for a little bit. But if you guys have any questions for me, you can just hit me up on Discord.
Cool. Adnan?
Yeah, you can message me on Twitter. My handle is at AA7Trades. So if anyone wants to chat.
Cool. And Mo?
Twitter handle is short isn't easy.
Yeah, man.
I tell you what, on that point, I think that is a great way to wrap it up. Shorting is not easy. And thank you all. I've had a blast. I can talk about this all day. Hopefully you've all enjoyed it as well. Thank you so much for your time. And maybe we'll have to do part 2 in the future. But until then, have a good one, guys. Thank you very much. Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.